Hey there traders, and welcome back for episode 84 from the StockBandit.tv. I'm always glad that you've made it. Now, the aim of these videos is to make you a better trader, and that's what I hope to do in this clip. Alright, so it's earnings season right now for the next couple of weeks, and all of the publicly traded companies announce their second quarter earnings data during earnings season. In this case, sometimes it's later in the year, they do the corresponding quarter. But along with that comes a little bit more of a feel for how businesses are going, yes, but that's really not a big deal to me as a trader because I don't trade on fundamental data. But what is important to me is that stocks tend to make big moves after earnings reports, and most often those reports come outside of market hours. What that translates into is the potential for sizable gaps to occur in price between one day's closing price and the following day's open price. For example, let's check out a few of the post-earnings gaps here just over the past few days in both directions. Here's one in CSX. This gap right here was an earnings gap to the upside. Stock gave no opportunity to participate in that move because it closed right here one day and then it opened here today. So that's an example. Here's one to the downside. Let me zoom in here on the chart. PSMT was actually rallying pretty good, and then you see this huge gap right here. That was a downside gap following earnings. Look at all the huge volume that came along with that, and the stock has really just been slammed since then. That's another example right there. And in fact, even after the stock made a higher high, technically, that doesn't much matter when major fundamental scheduled news comes out on a company, and we can see just what a huge change of character that proved to offer. Now another one here, FDO. This one had just broken support right here to the downside, but earnings came out and the stock gaps up. So take a look at this huge gap to the upside, stock holding up here, and kind of a false breakdown there for anyone who got short down here. They just got totally reamed as the stock vaulted higher on that earnings news. Here's another one, CHTT. This one had just broken out to the upside. It then started to drift down, and then you saw this big gap to the downside following earnings. Okay, now the key here is to just keep a very close eye on the earnings calendar and avoid holding those stocks which are set to report. So whether that's tonight or tomorrow morning before the opening bell, the idea here is to avoid holding those positions when those companies are reporting earnings. Okay. Now I want to show you three earnings calendars that I keep a close eye on, and they're really great, and they're easy to access, and I'll also include links to them below the video here. But one of them is Yahoo Finance. They've got a good earnings calendar. Another one is called earningswhispers.com, and what you do is just type in the symbol right here and click on Get, and it'll tell you when that company is set to report. So for example, Intel obviously reported earnings today after the close. There's that news right there. And another one is earnings.com. Once you click to enter the site, you just come up here and just click on ticker and type in the name and click go, and it'll bring up the earnings data for that as well. So of all the earnings calendars out there, none of them that I've found are perfect, but sometimes you'll even see some conflicting dates. So whenever that happens for me, what I do is I just go with the majority, or better yet, I'll avoid both dates. You can always contact the company if you really need to know as well. I always plan to be out of trades before the earnings report comes out, so that I'm able to avoid and eliminate entirely that gap risk that is so commonly associated with earnings. Sure, it can make me some great fast money. Let's say, for example, I had some hunch that this company, I don't even know what they do, consumer non-durables, personal products, but let's say, for example, I thought that this was going to gap down, and so I took a short sale here. Maybe this gap right here is almost free money, okay? But it could also cost me a lot of money. What if my hunch was incorrect? What if I thought this stock was going to gap higher and I bought this? Then I'm sitting on an instant loser following that earnings report, and therefore holding positions into earnings can cost me dearly. And it truly is a total coin toss to to hold trades into earnings. But the reason that I personally don't do it is that I'm unable to manage my risk. And anyone who wants to succeed over the long haul with trading absolutely must be willing to preserve capital. And earnings season is one of those times. Always be sure that you're able and capable of managing your risk. And if you aren't, then you're really just hoping to get lucky, and that's certainly no strategy to live on as a trader. Now, let me clarify just one last thing. I do not mind holding overnight positions during earnings season. I simply don't want to be holding stocks of those companies which are reporting between today's closing bell and tomorrow's open. All else is still fair game. All right? So thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.